Yo, it is Monday, May 4th, 2026. So good to see you all this beautiful Monday morning here in Austin. Lots of exciting news going on here in the Austin market. Lots to go over, and I really look forward to seeing exactly what is happening with the market. I want to remind you that we are having our Wednesday meeting on Wednesday over Zoom, this same exact link, 10 a.m. Be sure to join us. And then we are having our Friday meeting. So be sure to join us for our Friday meeting. Cannot wait for Wednesday and for Friday. We are going to start off by updating the best, the most reliable, the most accurate leading market indicator. Checking out what's happening this past week over the past 7 days. And we're going to compare it to the same exact week last year, which this is what? This is week, let me take a look at the week. This is week 18. We're on week 18 of the year. So let's go ahead and update the previous few weeks. Make sure we capture all of the pendings. Keep in mind, this is Travis, Williamson, Hayes, Caldwell, Burnett, and Bastrop counties. We're going to go backwards in time a little bit. We're going to go from the 20th to the 27th of April. Take a look at active under contract. This is going to change to 746. And then we're going to take a look at the pending, and this will also change to 467. We're going to go a week before from the 13th to the 20th. That's going to be 596. From the 6th to the 13th, that's going to be 599. That stays the same. From the 30th to the 6th, that's going to be 611. Let me just do a few more weeks to make sure that everything is good to go. We don't have to update anything else. 630, and then I'm going to go from the 2nd to the 9th. That's going to be 585. Great. Everything is perfect. Everything is good to go. We can now start updating this week. As a matter of fact, before we do that, I want to point out a few really exciting things. We are now, not counting this week, 10 weeks in a row where the new listing to pending ratio outperformed the previous year. For some of the newer team price agents, or if you're watching this for the first time, I want to give you a really brief 90-second overview of the new listing to pending ratio and why we track it, why we put this together. Simplest ratio in the world. We take everything that is new on the market, we add everything that is back on the market, and we simply divide it by everything that is active under contract and went pending. So it's going to be the ratio between what's incoming into the market and what's been absorbed by the market. So if you get a ratio of 1, exactly 1.00, that means that 1,000 listings came on the market, 1,000 listings were absorbed by the market. Inventory neither goes up nor goes down. You just have that perfect market equilibrium. When the ratio is under 1, and let's just take a look at 2 weeks ago where the ratio was 0.9 or 0.79, then let's just say that 1,000 listings came on the market with a 0.79 ratio. It means that 790 listings were absorbed by the market. So then we do see inventory go up over time because we have less listings being absorbed by the market compared to listings that came into the market. And of course, if the ratio is over 1, then the opposite happens. If you've got a 1.25 ratio, that means that 1,000 listings came on the market in 1,250 were absorbed by the market. So you're now pulling from existing inventory, and inventory goes down. We've got all this information on teamprice.com under Insight and Statistics. You can just scroll down. You can go to new listing to pending ratio, and then it defines, it interprets the new listing to pending ratio. Below 0.5 is going to be a very cold market. Between 0.5 and 0.6, substantial inventory growth. 0.6 to 0.7, tangible. 7 to 8.5, neutral. 8.5 to 1, leaning towards sellers. 1 to 1.1, sellers market. Anything above 1.1 is going to be a hot market, a very strong sellers market. So now that we've got our definitions, let's take a look at what's going on from the 27th to the 4th. Keep in mind that between now and 11:59 p.m. tomorrow, new price increase, price drop, back on the market, active under contract will continue to update. When you receive the updated new listing to pending ratio tomorrow morning, or when you check our website with the updated ratio tomorrow morning, all of these fields, new price increase, price drop, back on the market will lock. It'll never change again. Whereas active under contract and pending will continue to update for the next few weeks, more so on the pending side. Agents, especially new construction, new builds, they're really delayed when it comes to updating the new listing to pending ratio. That's why it's important for us to always look at this information on an ongoing basis. From the 27th of April to May 4th, we are looking at, interesting, 1283. 1,283 new listings have entered the market, 14 less than last week, but it's only 10:10 a.m. We have another, 13 hours and 49 now minutes left in the day. We can expect about another 100 or so listings to enter the market between 1 and 125-ish. So we're going to cross into the 1,400. I'd say when it's all said and done and you update this tomorrow, or you look into this updated one tomorrow morning, we'll be at about 14 to 1425. Let's take a look at price increase. 144. Interesting. I am noticing, even before I click on price drops, I started receiving on the custom searches and the auto searches that I have on the MLS, I started getting a lot of notices of price decreases. A lot of people were a little bit too aggressive going into the April market, and we have a very short market. I would say that our market already peaked as far as demand is concerned, and we now slow down between now and the end of the year, starts picking back up. We have a very short selling season in Austin. Now, on the number of sold properties, historically, that's going to peak between June and July, May-ish, June, July timeframe, and then it slows down. But on the activity side of things, on the demand side of things, we're looking at April into the first week or so of May, and then things start slowing down. Over the past 2 years, the activity index peaked towards the end of February. This year, we actually had 2 peaks that occurred, and we're going to go over that information. But that right there, I'd say we peaked right now. Now we just start pulling back a little bit, start slowing down a little bit. So you do have agents, sellers that feel like they missed the market and are now price correcting, doing the price drop. So let's see if the data confirms that. That's just anecdotal information that I'm seeing based on the alerts that I'm receiving. But let me go ahead and click on this number. And, okay, there we go, 1965. There you have it. This confirms it. 93%. Now, this 93%, don't get confused. It doesn't mean that 93% of new listings, active listings, whatever, had a price drop. It has nothing to do with that. This is out of the price movement that could have occurred, either a price increase or a price decrease. What percentage was a price decrease? 93% is going to be the highest number going all the way back to the 3rd week of October. That was 94%. So that's meaningful. People did miss the mark, got a little bit too assertive, a little bit too aggressive. We're going to take a look at the activity index for cities. We now have only one city that's on the green for the activity index. We had 3 that was on the green on Friday. Now we've got 1. So a little bit of that pullback in demand. Does it have anything to do with rates having gone up to 6.625? You can look at the bond market this morning. It's not looking great. We're up 4.7 basis points on the bond market. The bond market, the MBS market, mortgage-backed security market. They're now adjusting the pricing based on the news from last week, which was not the greatest news in the world. A little bit hotter than expected inflation. Not the best news in the world last week. Let's take a look at back on the market. We're at 211 back on the market. That number also drops a little bit as a percentage, 16%. Oh, okay. Active under contract, 488. This is where you get to guess. I need 5 guesses. I need 5 brave souls to guess the pending. Let's get 5 brave souls to guess on the pending. Let's get 5 people. You will write down over chat what you are thinking. Ryan is going to start us off with 198, 213 on IE, 234 Seth. Precious at a very bearish 135. Violet coming in at 218. And we have our 5. Let me go ahead and click on this number. Okay, here's the good news. It outperformed all of your guesses. 256. It outperformed all of your guesses, which is great. I'm very grateful for that. And yet it is coming in at a slower than expected, a 0.50 going into the week. Now, let me take a look at the summary from last week and see what that Monday recap was. Where were we when I sent you the Monday recap? The new listing to pending ratio this exact day last week came in at, my screen is refreshing with that email, came in at 0.54. So we are off. We're off by almost 10 percentage points when you look at the ratio percentage difference. We're now at a 0.50. We were at 0.54 last week. Now, we ended last week at a very healthy 0.79. We outperformed the same exact week last year, which was 0.70. This is going to continue to go up. I would say it's going to settle somewhere around the 0.81 to 0.82, same number we saw at the end of March. But are we going to outperform 0.72? Good news, yes, we will. Absolutely, we will. So we are going to have 11 weeks in a row where the new listing to pending ratio is outperforming last year. So even though that we are seeing a little bit of a pullback in demand, that's because of market cycle. Our market does have that market cycle that follows every single year. And we have a very short, quick selling season within the Austin market, something we have to know. But we're just simply following normal market cycles within our specific market. Demand is still there. Demand is still outperforming last year. But if you do have that listing that you feel like you missed the mark on that subdivision, you missed the market, you're now playing catch up, you've got to get ahead of that. You now have to be the first one that does a price drop. If the goal of the seller is to go ahead and sell that property quickly, don't wait until the other properties start chasing the market down. Get ahead of them because the buyers are still out there. Buyers are still shopping, still good activity. We're still outperforming pending 6% year over year. We're still down on months of inventory, still down on active listings, still way better compared to last year. All the indicators are pointing on the positive. It's simply based on market cycle. Let's go ahead and compare the same week. We are down 271 on the number of new listings entering the market. That's not going to go positive. We're not going to get 271 new listings entering the market in the next 13 hours and 43 minutes. That absolutely will not happen. That's down 17.4%. We're down 95 on price increase. That's going to stay negative. We're down 139 on price decrease. There's a chance that'll go positive. We're down on back on the market. And then we are down 42.6% on pending. That's a pretty big number. That's a very big number. I'm just going to go ahead and call it. I would say that we are going to be positive single digit, but I'm being very positive on my forecast because with a 42.6% year over year drop on pending, there's going to be that chance that we stay negative. If we do stay negative, it's going to be single digit. It'll be something similar to the week of March 30th, where we were down 4.4%. So it's going to be just a haircut one way or the other. It's either going to be positive into 1 or 2% or negative 1 or 2%. That's going to be the spread. It's going to be very similar to last year. So I would say still looking good on the ratio being better. And the reason why is because the number of new listings compared to the same week last year dramatically underperforming. So even though we could very well end with a negative on pending, because we're going to have a larger negative on active, we're going to have a better ratio because that ratio measures the difference between the two, which is why that ratio is so good, is because some years you're going to have a little bit more listings this week due to weather, due to events, and that's why I'm obsessed with the ratio. Let's take a look at the monthly ratio. What I have to do now is go to active under contract and take a look at the entire month of April. And this is going to be 2586, 2586. And let's update the pending. That's going to be 1899. And we're at a 0.68 ratio for the month of April. I'm not going to update May quite yet until Monday next week. Next Monday, we're going to have the ratio for May so we can start doing the month to date. By the time we start updating the May, it's going to be May 11th. 4 days does not give us enough data to have a really reliable and accurate reading. It's only 4 days. I'll probably wait until Thursday, actually. I'll do that Thursday for our weekly stats. That'll be 7 days. That'll give us enough data for us to have really good readings for how we are starting May compared to May of last year, looking at the ratio. But so far, we are absolutely outperforming last year when you look at the ratio, which is really good. Not so much outperforming 2 years ago at 0.72. We're not going to bridge that gap. And then April 0.91, forget about it. April 2023, 0.91 ratio. We're not going to get anywhere close to that 0.91 ratio. The other thing that I'm noticing, which is really interesting, open house is slowing down. I'm not seeing as many open houses. I mean, 2973 on open house. I was expecting a number north of 3,000. Did not beat that 3,000. So a little bit of a pullback right there on open house. Any questions, you all, on the new listing to pending ratio? Any questions on the new listing to pending ratio? Going once, going twice, or let's go ahead and save this. Check your email. I will email you all this PDF so that you have access to it and you can look over everything. Let's take a look at the bond market and let's take a look at rates. The amazing Robert went ahead and emailed his rate sheet for the day, and let's see what's going on. Now, keep in mind that from the time this rate sheet was emailed to what's happening right now in the bond market, yeah, it's not looking good. We're up 6 basis points right now, and that sucker's a rocket ship. You can see right there behind me. We're going to have a repricing. We are absolutely. So even though the rate sheet from earlier this morning says 6.5%, it's 6.625. No way we're not going to get a repricing with the way that the bond market is working right now. Expect a repricing today unless something changes dramatically. But right now, it's not changing. Right now, it's looking pretty hot. And let's take a look at what's going on this week, economic data, and how we can position our clients to where they can make really good decisions. The most important day this week for rates is going to be Tuesday and Friday. Those are going to be the red days that will affect interest rates the most. We've got a few bond auctions happening 10:30 a.m. here shortly in 7 minutes. Factory orders, way better than expected. Factory orders month over month. That's good news. That's good news for the economy. Vehicle sales, a little bit short of the consensus, a little bit less than the previous. We have tomorrow building permits. That's when we will be able to update our building permits resource that focuses within our MSA. We've got JOLT, job opening labor turnover report. We've got new home sales. This is going to be really impactful for our business. We've got job quits. We've got Institute of Supply Chain Management. Tomorrow's a pretty big day, especially with the Institute of Supply Chain Management Service PMI, which is a Purchaser Manager Index. We've got JOLT, new home sales, and then, of course, trade balance. We've got economic optimism. They're expecting that to inch up a little bit. Going into Wednesday, average day, not the most consequential day. We've got some mortgage data coming out every Wednesday, mortgage applications, ADP payroll change, commodity data. Going into Thursday, also a little bit of a neutral day, very similar to Wednesday, used cars prices, construction sales, productivity. And then we've got the bigger day. This is going to be the biggest day, and it's going to be Friday. That's where we have non-farm payroll unemployment, and we've got the University of Michigan consumer sentiment, economic conditions, consumer expectation. So Friday is the big day. 2 big days for rates, tomorrow and Friday. Even though today is turning out to be a fairly consequential day, we're now up 6.1 basis points on the 10-year Treasury. That has a correlative effect on mortgage rates, not causation, correlation. When we see the 10-year Treasury going up, it's a guaranteed that rates will also go up. So I would say unless things reverse pretty quickly between now and about 2 p.m., expect another repricing for the negative on mortgage from 6.5 to 6.25, which will be really interesting to see loan application numbers coming out on Wednesday this week, because we ended last week at 6.625. We started today at 6.5. That's been wiped away already. So let's see if we have a negative on Wednesday for mortgage applications. Last week, we did have a negative 1.6%. Let's just see what happens this week. So that's going to be your rate update. As you know, if you are a Team Price member, you can always go to resources.teamprice.com, click on mortgage rates, and every time the amazing Robert sends me a rate sheet, I take a screenshot, I post it there. You can bookmark this URL and you can always access the latest rate sheet that we have access to. Let's go ahead and take a look at the market overview. This is going to be your Austin daily real estate briefing. Active, you can see we're down 0.5 percentage point. We are at 16,234. And take a look at pendings, doing very well, up 6%. There's the active going all the way back to April 2022. Out of all of the 16,234 active listings currently on the market, a fairly substantial 48.3 of those have actually gotten a price decrease. We are down only 0.53% year over year on the number of active. This year, or today, we've got 16,234, exactly the same day last year, 16,320. On the cumulative new listings entering the market, we are down, and this does not capture any May. This is going to be the latest and greatest cumulative January, February, March, April, down 2% on the cumulative active. So you take every new listing, not cumulative active, cumulative new. Every new listing that came on the market for those 4 months, 2025, 19,108, 2026, 18,724. Pendings, we can see that we outperformed pendings over the past 2 years, which is really good news for us. If you look at the entire pending chart, let me go ahead and just pull this up because some really good information on the residential inventory pending resource that we track. Take a look at pendings. Last 2 months ago, 5191. We crossed 5,000 for the first time since May 2023. That was March 2026. So far, we're at 4911. So we have outperformed last year by 1.6%. This number is going to go up more. Agents are still updating pending. We are going to cross the 5,000. Expect around 5,050. So really good news. Now, let's take a look at the city of Austin. We got days on the market, median, months of inventory. We've got the activity index. That outperformed last year already, which is really encouraging, really good. We've got the absorption ratio. That's outperformed over the past 2 months. And let's take a look at city of Austin. New, and there's the pending. City of Austin, amazing. We have been positive all year within the city of Austin as opposed to the entire MLS. January plus 2.9%. February, amazing February, up 12.4%. March up 7.5%. April up 7.7%. So far, really, really good year. It's been a good 2 years within the city of Austin. Last year, we only had 1, 2, 3, 4, 5. 5 out of the 12 months last year, we underperformed compared to the year before. And you really can't take a look at this one, and we had negative 12. But for some reason, February 2024, it absolutely shot up to 1357. That right there was a slight anomaly that happened in 2024. And then we did slow down towards the latter part of Q2, Q3, picked up a little bit going into Q4. But last year, 5 went negative, 7 went positive. So far this year, every month, January, February, March, April, all positive. So overall, still continued good momentum within properties that are going under contract. Cumulative pendings up 6%. January through April last year, 15,524, and we've beat that number by almost 1,000. We're close to almost 900. Comes out to 800 and what is it, 91 or something like that. So really good, positive, 6% year over year improvement on pending. That's great. And that's going to give us a positive activity index year over year of 5%. We've got less new listings entering the market. Therefore, we've got lower inventory that's happening right now. We've got less active listings right now today than we did exactly the same day last year. We've got a 6% gain on the pending side. What does that mean for activity index? Positive. Last year, 22.9, same day. This day, 24. Even resale was over 21. But one thing to keep in mind, on Friday, we had 3 cities that were over 30% activity index. That backtracked. We're at 30.41. And even when you look at zip codes, we had 39 approaching 50% activity index. Now we're at 40% activity index. We've got less greens today than we did on Friday because we still had some pendings that had not been switched over to closed on Friday. Agents are now updating the MLS. They updated the MLS over the weekend. And because we capture this information on a daily basis, this is going to give us the most accurate reading on the pulse of the market. Overall, not bad unless you're on the bottom of this list. Marble Falls, 01, Wimberley, Dale. 05 did go up a little bit, which is encouraging, 12.45. But we've got 01 right now struggling at 8.7. The weekly new listing to pending ratio, or the monthly new listing to pending ratio at a 0.68. We are outperforming last year, which is great. There's that 0.68. April of 2025, 0.65. The ratio so far for the year is at a 0.74, matching exactly the ratio that we ended all of last year with. Months of inventory down 2.2%. We are at 5.71 this year compared to 5.84 last year. That's a fairly substantial difference. We still have 3 cities in the green: Cedar Park, Pflugerville, Round Rock. And take a look at the year over year and the past 2-year change in months of inventory. City of Austin now has 16.9% less months of inventory this year compared to last year, and only 10% more compared to 2 years ago. That's a really low number. We've got 4 cities that have less inventory this year compared to 2 years ago, and that's going to be, or 3 cities. That's going to be Buda, Cedar Creek, and Del Valley. All of those less inventory compared to 2 years ago. Compared to 1 year ago, we've got, gosh, what is this? Close to 15. I'm going to add a little calculation that gives me the number right there on top because I hate having to count all the time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 50% of the cities that we track, more than 50%, have less months of inventory this year compared to last year. That's a big difference. That is meaningful right there. And what I'll do when you look at this tomorrow, right here next to the year over year, it'll have a little summary so you can just immediately look at it and see not only the number, but also a percentage of the ones that are now negative and positive compared to last year. So far, April 2026, 2737 closed listings. We are up 2.5% year over year. When you adjust that for population, we are up slightly, up only 0.5% year over year. Outperforming last year, which is great. Outperforming 2011, outperforming 2009. So it does indeed. Everything is pointing to 2025 having been the bottom of the market and a slow and gradual recovery from 2025 being the bottom of the market. Good news for us in the industry, when you adjust the number of sold per 1,000 realtors, we are up 8.6%, and we are experiencing first quarter the single best, first quarter plus 1 month, the single best number of sold properties per 1,000 realtors in the past 4 years. And that's really good news for us. What about sold? We are positive. We are still having some agents update the number of sold properties for the month of April. We are positive on the number sold year over year. We are positive on the average sold year over year. We are negative year over year on the median sold. We did outperform last month on the sold to list price ratio. We did not outperform last year on the sold to list price ratio. We had a better sold to list price ratio last year than we had this year. So the buyers still have leverage. The buyers are still able to negotiate concessions, and we're seeing that on the sold to list price ratio. There's your average. We are plus 1.1. Of course, we're still down from the market peak. It's going to take a long time, years and years, for us to return to peak market value. We're down 13.6 on the median side. So far, we're ending April at $440,000. The market is officially down 20%. We're down 1.2% year over year. We're down 5.38% compared to 36 months ago. And if today is the bottom of the market at $440,000, if you simply use the compound appreciation of 4.694%, we are projecting roughly 61 months to go back to market peak. That's April 2031. So far this year, prices are down both on the median and on the average because we're taking all 9,390 properties that have closed so far this year. January and February, both negative numbers, so that's highly influencing the entire amount this year. I expect the number to shrink down, get closer to positive on the average as we keep updating this information between now and, of course, December. On the median side, I'd say we're going to end negative year over year on the median side, and that takes all 30,690 properties that closed last year. Median sold price $431. We're at $417 right now. And we're a third just about done with the number of sold properties that we're expecting this year. We are going to outperform last year on the number of sold. I can assure you of that. That is a promise. You can mark my words on that. I would say we're going to outperform on the average, but we're still going to be very slight on the median. It's not going to be 2%, but it will be negative. I would even say negative under 1%. But right now, looking at the forecast, looking at what happens with the market going into October, November, December, I do expect a negative unless we see dramatic changes to consumer behavior. When we track what they are buying, what's going under contract, that bottom 25th percentile is outperforming on the demand side. The upper 25th percentile is outperforming on the pricing side. But on the demand side, people are actually going towards that bottom price point. And I do have a resource that points to that. Let's see if I can find that resource here really quick for you so that we can discuss this just a little bit. No, this isn't it. So let me go ahead and close that. And is this it? No, this isn't it. Let me go ahead and close that. I will find that for you. I will find that for you. It's a good resource that we put together that shows you that difference, and it shows you that analysis. So I will find that here for you, and then I'll show you that information here later on. Let's see. Yeah, I'll look for that information and I'll show it to you. So far, this is another number that went negative or not as many positive. When you look at the appreciation year over year for cities, we now have 5 cities that are up in value. When you look at the median price, we were at 6 on Friday, but right now we are at 5. So we went from 6 to 5, and that's where we are right now. Okay, I did find the resource that I was looking to share with you, and this is going to be the price matrix. This is going to be this pricing matrix. Let me go ahead and open it up in Adobe so that you can have the entire screen. So take a look at the activity index and the absorption ratio, especially the activity index, and look at the greens. We've got a massive demand that is happening from the $0 to $400,000. When you look at the percentile analysis, the bottom 25th percentile stops at 324. So a vast majority of the demand is focused right at, 29% up to 300,000, drops down a little bit of 27% between 300,000 and 400,000. Strong demand on that bottom 25th percentile. And then you look at the upper 25th percentile, that price starts at 650. Well, look at the 650. Right there, it drops to 23%. At 700, it plummets. At 1.3 million, we're under 20%. So the demand is focused on that bottom 25th percentile. Everything changes when you go into the top 25th percentile as far as demand is concerned, but the pricing on the upper 25th percentile, it's still going up in price, still very healthy. So what does that tell us? Number one, look at the percentage of properties with the price cut. Those sellers are holding firm. The properties between 1.2 million and 2 million plus, apart from the 1.7 and 1.8 at 52%, those sellers are holding steady on pricing. Look at the days on the market. You've got 76, 73. So a little bit of that stubborn behavior on the seller side of things. Over 1.4 million, inventory more than doubles. Every single price break over 1.4 million is over 10 months of inventory, over 11, over 12 months of inventory. So you've got a ton of inventory. You've got collapsing demand on that price point, and yet you've got sellers holding steady. You've got sellers saying, nope, not going to drop the price. I'm going to hold steady here. And something really interesting, whereas the price point with the highest price cut is going to be the 100 to 200,000. And then the second is going to be the 200 to 300,000. Third is going to be the 1.7 and 1.8 million, which is an anomaly. That all of a sudden spikes. But the price cuts are focused on the under $900,000 primarily. And that's where the activity is also focused on. So what does that tell you about buyer behavior? They're going after the properties that are priced right. It's got to look good. It's got to look perfect, and it's got to be priced right. We've got a comment right here. I feel like the bottom percentile of the market is moving for buyers that want to buy, but are still cautious of other factors. Completely agree with you. The bottom 25th percentile of the market is the driving force in activity right now, proven by the activity index, proven by the absorption ratio, proven by months of inventory. And yet, when you look at the price cuts, it doesn't mean that the seller can overprice, because we're noticing a huge percentage of sellers lowering the price quite substantially to get that buyer to move forward. Why is that? Because like you said, Bertina, the buyers are still cautious. They're picky. They know they can be picky. So it's got to be perfect. It's got to be priced right no matter what. 5 cities have gone up in value compared to last year. The cities in the green, Bastrop, Burnett, Lago Vista on the positive, Smithville. in Wimberley. Wimberley is hitting record highs. Wimberley just hit an all-time high, a new peak on the median sold price this year, Wimberley. Compare that with Marble Falls, it's down 39%. Or what else? Or Buda, down 24%. Buta's flat, down by only $50 year over year. The Buda compound appreciation rate is only 3.6%, meaning that if today at 349,950 is the bottom for Buda, 90 months to return to peak value. Jarrow, 113 months to return to peak value. Jarrow's down 21%, 115 months. I mean, that's almost 10 years to return to peak value. City of Austin, only 2 years, only 24 months. Right now, we have approximately 2.8 sellers per buyer within the market. 0 cities are actually within the hot index. 5 are warm, 16 are balanced, 53%. 8 are cool, and 1 is downright cold. The city that's cold is going to be Smithville. On the zip code side of things, 3 zip codes are hot, doing very well. We've got 78737. That is hot. 78739, also hot. 78749. Those are the 3 cities that are going to be hot. 19, 1/4 of the 75 zip codes that we track are warm. 38 are balanced, 51%. 38 are balanced, 13 are cool, and 2 are cold. 78705 is cold, and then 78957 Smithville. Those are the only 2 zip codes that are considered cold when we look at our composite index, where we take a lot of factors. Good news, absorption ratio outperformed last year. 2nd month in a row where the absorption ratio, sold divided by active, outperformed last year. And then the market flow score, that scores the entire market from 0 to 10, 0 meaning the market is dead, absolutely dead. You better get a second job or else you're not going to make it. Only 1 month over the past 26 years or 20 years where the market was absolutely dead. That was January 2009. And then all the way to 10, where it does not matter. You're going to make a lot of money. The market is on fire. Everything is selling no matter what it's priced. We had quite a few 10 months. We had 4 10 months in 2020, August, September, November, December, and then 2021, both November and December. What we're looking for here are 4 months in a row where the market flow score is outperforming last year, and we're at 3 months in a row. 4.26 versus 4.16, 4.98 versus 4.62, 4.32 versus 3.84. Next month, we are looking to beat, that's our hope, 4.7. Once we hit that 4-month mark, historically, it means that we're in recovery. I'm already calling the market in recovery. When you log into Austin Metrics, you scroll down. When you go to stats, there's a little block showing you where the market is. I'm already saying the market is in recovery mode. When that number hits 4 months in a row, historically, it is recovery. It's all set recovery. And that, my friends, is your Austin Daily Briefing recap. Let's go ahead and open up any questions, comments, concerns, criticisms, or complaints. Any questions? Any questions, comments, concerns, criticisms, or complaints? Going once. Going twice. All right, you all, that's all I have. Thank you all so much for joining. Super, super appreciate it. If there are no questions, comments, concerns, criticisms, or complaints, hit it hard. Super excited for what's happening in the Austin market, especially compared to last year. And that's all I have. So thank you all so very much for joining. Super, super appreciate it.